Hello traders, this is McBillion. Today is August 23rd, 2015. Let's talk about the market. I'm hoping that everyone is having a great weekend. Right now is Sunday, 11 p.m. Eastern Time, and I'm going to show you right here in the Spider mini futures that is breaking down. Right now is 42 handles down, confirming the breakdown of the major multi-year channel. Now there's some levels that we need to watch right now. One of the levels in the S&P is 1882, which it was resistant back in March 2014. It was support back in July 2014, and from there you can easily say that we have never tested that level this year. So it looks like it's going there very fast and furious, so you have to be careful right here. We did a great last week. We up for the year, so now we have to take care of those profits and continue to make more profits. So you have to be patient right here, because right now the market is very volatile. If you enter in the wrong side, you can get destroyed. Last Friday, many of you sent me an email. Let's enter long because it went down. I said no, let's wait. I told you let's wait, because this is not the way you trade. If you see the spider here, you also break down the major multi-year channel, and right here is at the major Fibonacci support 197.48. Let me zoom this out for you. Okay, much better. Right here, you see this support right here? It was support back in December 2014. It was support in February 2015 this year, and right now we are right there. We stopped right there Friday, but based on the futures, we're gonna break down easily like butter tomorrow, and we're gonna open around right here, heading to 193, which is the Fibonacci, the 50% Fibonacci retracement. It's an important level, and at that level, I think there's gonna be a huge divergence. If you see the DMI, you see the minus directional is over the top, and the plus directional has a little room, but that room is gonna take by the bears tomorrow. So this plus directional is gonna go down. So why do you think this plus directional didn't went down last Friday or Thursday when the market was breaking down so fast, so furious? The reason is only big money moved this directional, but also it has to be not only one person or a couple persons selling millions of dollars in the S&P or on any stock. It has to be a lot of volume and a lot of investors. That's the way that only move these directionals. Let's say one investor pulled the trigger and sells $5 million in the S&P or in the Spider. It will move these directionals because it's only one. But if you have 20 of them selling 1 million, then this thing will be moved really fast, and that's when you get the directionals. And I think based on DMI that and the price action for futures is if we open around 193, this plus directional is gonna be down. And notice now that this ADX is trending, so it's gonna be really nice bounce if we are enough patient to take it. So 193 is my take right here. I might enter long right here, and my take is that this is gonna test this breakout right here at 203 or 200, and then it's gonna continue down. That's usually what happens, and we have to be careful when you enter and trade a divergence like this one. You see directionals on the top and the bottom. You can always trade those, but you have to be careful and get out with your money when you have to. And so let's wait for my alert if I see, because I have to watch volume also. That's another thing that you have to watch, the volume. Now let's gonna talk about another one, DIA, which is the Dow Jones APS. You can see here also horrible. The breakdown, the major support is heading down. I think I don't see a lot of support at 163. As you can see here, back in October 2014, it wasn't a good support right here. So I think it's gonna go to this major support, which is the 78.6 retracement, which is around 158. If you see the directionals on DMI, let me show you directionals. Look at the directionals. You see this room right here? Yeah, the minus directional is over the top, but the plus directional isn't. So that's when I say there's room on that directionals. That's when I say that the price can still go down before it pause or pull back. Remember, divergence, the price can pull back or it can pause. Usually, if you get in those divergence and trade for a pullback, you have to be careful. Get your money when you can, because it can pull back a little bit and still pause there for a couple days and then continue down, because now we are trading and the bears on. So you have to be careful. You go long. The best game right now is to wait until it goes up. You know, you correct the divergence, this will go down, the plus direction will go up a little bit, and then you enter short. That's the best game. But we can also trade the bounce. We can get the trade bounce and you know, make a couple 20 or 50%. That's good. We always like that. So now let's talk about another one. Let me show you what happened with the Russell. The Russell hasn't been broken yet. Look at this. This is very interesting, because usually the small caps are the one that go down easily. You know, the small caps are the small stocks, so the small investor get nervous, and they're usually the first one to sell. But no, in this case, it's holding right here, but based on future, again, I think it's gonna break down tomorrow. And the level to watch, which is a major Fibonacci support. It was support back in November 2013, back in February 14, May 14, it was support October 14. This year we haven't tested that level, so it's gonna test this level, which is 106.97. Now it's 106.97, but you have to play, remember, to usually go and you know, round the numbers. It's 107 in the IWM. So that's the number I'm going to be watching. If we open right there tomorrow, it's going to be this huge divergence, because this one, let me show you, this is different from the DIA and the Spider. It's already on divergence. The minus directional is overextended of the top, and the plus directional is at the bottom. You see this? It's at the bottom already. So the divergence is already there, and we're going to overextend it even more. So it can be a nice trade to go long right there if you can use limit orders and get the best feeling. And I promise you that that's gonna bounce. That's gonna bounce, even a little bit. But you have to be careful. If we get a small bounce, to get out, take some profits and get out. And if we are lucky and this bounce is good, we can make a lot of money. So let's see what happens tomorrow, and also watch always price. Now let's talk about Apple. Apple, the same thing. It's already in divergence in the DMI, and we're getting close to major multi-year support trend line. This trend line is a lot of support at that trend line. If you want to own Apple, this is the time to own Apple right here, 103. I have been telling you about this level, 103. I think it's a great level to enter long. Now, if you break down the 103, just get out. Easy trade. There's no brain in that. You know, you enter here, start to move up, and then it moves down, get out. But it's because it's a huge divergence, it's a major multi-year channel trend line support. I think it's gonna bounce right here and probably test this area right here around 115, which I'll be trying to short this area. If you go right here, then it's gonna go down again and retest again. You know, many traders, when they trade this kind of markets, they always look for the second test to enter. You know, if it goes here, goes up, and then retest, then is when they enter long. You know, I don't trade like that, because I think any bounce, you can make money in any bounce. You just have to be careful and don't get greedy. make 20%. If 20% profits is not good for you, you look for something else, because this is the way you make money. 20%, 20%, 20%, and you accumulate and you make money, but you have to be really disciplined. If you start looking for home runs, I see a lot of traders that they always looking for 400% profit. Yeah, they're fine, they're beautiful, but that's not the way to trade, because if you always looking for those, that means that you also gonna lose a lot of money, because when you look for those, you expose yourself and the risk is greater. Now let's talk about another one that I want to show you. That's the Facebook. This is again, this is not broken like the Apple, like the other one. This is stronger than Apple. This is the one that I like. If you want to buy this one, this is stronger, because Apple break down the short support, is testing the major support, but this one is still in the short support trend line. So it's gonna test this right here, and it probably bounce really nice, and this one can be a nice trade if it bounce from here. So I'm gonna be watching volume also when it tests right here tomorrow, to see if we can enter long in this one. However, the DMI is not promising, because it's not in divergence. It's just a crossover right there, but a DMI is at 21, meaning that the bear is strong. So there is no divergence on this one. So be careful on this one, because if it doesn't bounce right here, we can continue and break down. If you break down also, we have to be open mind. If you break down this support right here, we can enter short also. Even if I like Facebook a lot, many people are going to be watching this short support. If you break down this short support, it's going to go to 69.79. Okay, traders, this is everything for today. Trade on.